let's start off and take a look at those numbers. 19% drop in first half earnings, and that's after bad loans jumped and customers also defaulted quite a bit. Your initial thoughts on those numbers?
Well, you know, I think it's true to say that this has been a very difficult first half, and I think it's going to be a difficult year. The economy is going through a tough time. Consumers have been under enormous pressure, and we are starting to see the corporate sector also under quite a lot of pressure. So it was always going to be a very difficult year. And as you can see from the difference between headline earnings and attributable earnings, we've also taken quite a large impairment charge due to our exposure to single stock futures. So we've taken that now, and it's out of our numbers. And so I think going forward, we'll see, you know, the volatility that would have been in the numbers because of that taken out. And so I think shareholders should take some comfort from that as well.
Maria, good morning. It's Stephen Gagnon speaking. I mean, you talk about that impairment charge of 1.1 billion, which leaves just a carrying value of 445 million on those four companies that you had to take over last year or take the stakes in. When do you think you'll be in a position to offload those back into the markets, if indeed that is your plan?
Well, you know, Stephen, I think what we should just, you know, we've now taken the impairment, and we will, you know, when the time is right, we will make, you know, the right decision for shareholders. We obviously want to maximize value, and we will make the decisions at the right time, and when we think that, you know, when we think that is. So I'm not going to make any decisions just yet. I think when the time is right, we'll do that.
Maria, would you say that controls were relatively lax, considering that such large positions were built up on illiquid shares?
You know, hindsight is always perfect vision, and so I think what we have done is we've gone through all our controls, all our risk management processes and systems where they needed to be strengthened. We have strengthened them. We have done an all-round evaluation of every single risk management process and control system in the business, and I think we really now can, you know, we can say that we have world-class risk management systems and controls in the business.
Maria, good morning. It's Nick here, BJM. Just wondering, from your point of view, looking at the local lending side, South Africa's banks remained relatively unscathed from the financial crisis. On the lending side, are you seeing an increase? Are you lending to the small and medium-sized businesses again? There's been a lot of people talking about the banks are not providing that credit facility anymore. You know, or where do you see us in the cycle on onshore point of view?
You know, it is. I know every analyst I've met with in the short time I've been in the banking sector has raised that in the last couple of months. What I can say to you is that where we have good credits, where there's a good business plan in place, where we know the customer well, where we can get through the right evaluations from a scorecard point of view, we are lending. But it is a very tough economic environment out there, and we also have a responsibility for ensuring that the customer is not overexposed. And so this is just one of those really, really difficult times. We want to, we're in the business of lending. That's what banks do. But I think it's really just making sure that there is the right credit, that you can price it properly, and that that we know when we can actually relax lending criteria, and it's not an easy call to make right now. I think we're still seeing asset values under enormous pressure.
Maria, there's also been quite a lot of talk about corporate defaults, none as yet, but do you foresee any such developments occurring going forward?
You know, we are monitoring the corporate sector very carefully. We have an early warning list. But you're right, we haven't seen any significant corporate defaults yet. Primarily, I think, or probably because we're all keeping very close to our clients, and our clients are keeping close to us. We're working very closely together, and I think that's probably one of the things that is different in this cycle maybe to previous cycles. I think everyone has learned that there isn't not too much benefit from remaining too far from each other, and that you need to work things out well in advance. So I think, you know, probably much closer working relationships. That certainly is one of the things that we have learned, and one of the key pillars of our strategy at ABSA, working very closely with our clients, whether they're in the retail sector or in the commercial sector. But you're right, we haven't seen any large corporate default, and we want to keep it that way.
Maria, your impairments have doubled, and of course the consumer does remain under pressure. You say in the commentary you expect defaults to keep rising for the remainder of the year. Given the interest rate cuts we have seen and the moves to try and ease that pressure on consumers, when would you expect a recovery?
Well, you know, we expect you know, impairments on the retail side to peak in the second half of this year. So we expect them to peak now. We're starting to see very early signs that things are easing off. After all, we've had 450 basis points in interest rate cuts, but those do take some time to come through, of course. I mean, one way of looking at that is to think that that does put some 6 billion rand back into people's pockets. Having said that, I think we should also remind ourselves that consumers have been quite highly indebted. Some 77% of disposable income, and debt service costs as a percentage of disposable income up at about 12%. So that's starting to come down, and we think that that's probably going to end the year at around 9%. On the corporate side, though, we only expect to see impairments peak in the first half of next year. So it is going to take some time for the recovery to really come through. So economy under pressure for the remainder of this year, some recovery next year, but it is going to be a slow recovery.